So the rates of tax, surcharge and cess for foreign companies as per the Income Tax Act 1961 are something which we have summarized as under. Now, one thing which is applicable in case of a non-resident is that in addition to the rates that we will be discussing now, certain incomes may be taxable at a gross rate. This concept we would be discussing later, but in addition to the 40% rate, what I can say is, just like in case of a resident, let's say a company, the tax rate is 30%, but if it has capital gain, the tax rate may be different. Similarly, in case of a foreign company, the tax rate is 40%, but depending on nature of income, there may be a gross basis of taxation which could be applicable on different streams of income. So for foreign companies, they are taxable at 40%. This rate would be further increased by a surcharge at the rate of 2% where total income exceeds rupees 1 crore. What does this mean? If the total income does not exceed 1 crore, then the surcharge rate is 0%, but does not exceed 10 crores. If you fall within this bracket, 2% surcharge, but 5% if the total income exceeds 10 crores, and 0 if the income is below this slab. The education cess, the secondary and higher education cess of 2% and 1% are applicable, and this 2% and 1% has to be calculated on the total of 40% plus surcharge. But this is applicable only in case of a foreign company. What about other assessees? If there are non-corporate, which means non-company, non-resident, the tax rates which are applicable to them are the same as are applicable to residents. But the higher basic exemption limit, which is available to resident senior citizens and super senior citizens, is not available for non-resident individuals. So in those two cases, except for this particular benefit, the tax rate which are applicable to the non-corporate non-residents are the same as they are applicable to a resident, which means that if there is a foreign firm, the tax rate will be 30%. If there's an individual, the tax rate will be the same as per the slabs applicable, right? Now let's look at what is the residential status concept in section 6, and why is it that this particular concept is so very important. The concept of a residential status is important because what is the amount of tax which will be levied and on what income will it be levied is determined according to the residential status of a person. If you are a resident, you are taxable on your global income, both the income that you earn in India and the one that you earn outside India. But अगर आप एक non-resident हैं, तो उस केस में only and only the income which is sourced from India is liable to tax, subject to any exceptions that may be available to you. So the tax incidence on a person means all the 7 categories, depends on the residential status of such person, whether you are a resident or you are a non-resident. Resident taxpayers are liable to pay tax on their global income. If you are a resident, you pay tax on your Indian income as well as foreign income, right? However, but before I go to this point, if you have to pay taxes on foreign income, what happens is you are given a credit of tax that you pay overseas. We will discuss this aspect at a later point in time, but you have to get a credit for the taxes that you might have paid overseas. However, the non-resident taxpayers, they are taxable only for their India sourced income. If there is an income that they earn outside India which does not have any nexus with the Indian operations, then in that case, those are outside the purview of the Income Tax Act. Now, like I said, taxpayers are classified into three broad categories on the basis of their residential status. Actually, it could be even two categories, but since their taxation varies between these two categories, we have just put it into three categories. At a higher level, you could either be a resident or you can be a non-resident. A resident could further be divided into resident and ordinary resident, and resident but not ordinary resident. Now, this concept of not ordinary resident or ordinary resident is applicable only in the case of individual and HUF, which means that for all other categories of assessees, they could either be resident and ordinary resident, or simply resident or non-resident. It is just that the individuals and HUF are further classified into resident but not ordinarily resident. The meaning of each one of these concepts, how they are applicable to various categories of person, is something which we will now look at one by one.